property sector, a 25 basis point reduction is expected at the end of the month and week, spurring a lot of optimism in the commercial property sector. This will result in a cumulative 75 basis point reduction that could potentially accelerate economic growth for 2025. CEO at Galetti Corporate Real Estate, John Jack, joins us for more insight. Thank you so much for your time, John. Now let's actually, just take it back. How hostile was the environment for commercial property in a high interest rate landscape, and did it resiliently ride out the storm?
Listen, in commercial real estate, yields or cap rates are largely tied to the interest rate. So as the interest rate tracks up, so do the yields.
Okay.
And a higher yield means, it's almost a better purchase depending on at that point in time. So as it tracks down, provided that the yield stays sticky for a while, you actually get a positive effect in the markets. People rush to market so that they can lock in the higher yield but get the lower interest rate. The other way around, as it's going up, you've got this low yield, but your interest rate going up and the market kind of dies off. So there's very little in terms of transactional activity. So what we're seeing now is a lot more transactional activity as people anticipate further interest rate reductions.
Yeah. I mean, just even before COVID, there were pockets of the commercial property sector that were seen to be in structural decline. Do you think that we could have a significant shift in that, or maybe it's just going to take some time?
Yeah, so we've already seen it. So a lot of the sort of business confidence in South Africa leads directly to the sort of business activity. And on the business side, you're really dealing with your architects, your finance houses, et cetera, et cetera. You and I are sitting in offices. Yeah. That's the office market sort of taking up space. And of course, you had your return to work, as you heard different companies around the world going return to work policy. Yeah. And largely in South Africa, people have returned to work, unless, of course, they're in an industry that they just don't use office space anymore. Tech, for example.
Yeah.
But in industrial, really, that just continued to go because that's logistics. We're still transporting goods through the economy. They export, import. And so logistics was really there. No one built. And so there was such a short supply of industrial property. But the office property is the one that was really in that structural decline. We've seen it reach a base. And in the Western Cape and Natal, for example, even we've started to see increases in rentals. And we're starting to see that in Johannesburg at the same time.
All right. Well, let's talk about those interest rate cuts. I think so far we've had 50 basis points, if I'm not mistaken. Of course, there's another one that is expected on a Thursday. How far can those interest rate cuts actually go in boosting the property sector? And commercial, rather, even. Yeah.
Yeah, they're really dribbling in, and really when an investor looks at an opportunity, certainly in the property market, it's very seldom that you're pricing in such small increments, So going from a 9.5 to a 9.75 is really, it's either a 9.5 or a 10% yield. So as they dribble them in, it has such a small impact. It's more the sentiment of, will there be further interest rate cuts? So if they're looking at overall 100 basis point interest rate cut, that's kind of what they're looking at. And now, of course, the guidance coming out that there's only going to be one interest rate cut in 2025. That's not good news overall. So the sentiment is great. We'll take the interest rate cut, certainly.
Yeah.
And that's fantastic. But, you'd want to see, we're expecting another 3, whereas now we're hearing this is the only one. So.
I mean, just even with this, you talk about also the Western Cape particularly, that's really seen the most upside in the recovery of some of these asset classes. Could we expect that to go across to the other provinces and maybe even the smaller provinces?
Yeah, so you've largely seen it in Natal and Western Cape, and it's driven largely by BPOs, so all of your call centers, really. And we're seeing South Africa becoming a destination country, really, for call centers from across the world. So call centers from Spain and from Europe and from all over Europe, at least, including Spain. But really, that's what it is. It's call centers, and they take up significant space. And these really sort of popular bigger cities are the beneficiary. The only other place outside of that is where you look at like a Kucha, for example, where you might get a tax break based on a call center setting up there. That's really it in terms of outside of Western Cape or Natal. We've seen some activity in Gauteng, certainly, but not on the same scale as the Western Cape has seen. And so the Western Cape is actually struggling. It's starting to see very little office space available in the market, certainly for your medium to larger size transactions.
So do you think that there could also be more room for more supply to be provided there, maybe where property companies are actually looking to add to supply, and particularly in the Western Cape?
Yeah, I do think so. And there are opportunities getting analyzed at the moment. But at the moment, if you see a crane in the sky, you can pretty much guarantee it's residential. I mean, there are so many residential products or projects underway at the moment. Ross, Block, these guys have got sort of 10, 20, projects in the pipeline and currently running, and they just keep coming to market. And so where you see that development at the moment, guys are focusing on residential because has the highest return, whereas commercial, certainly you'd have a return, but if you're deciding between the two, you're going to go residential. That's just where we're seeing the activity at the moment. So, but we could definitely see some more supply coming into the market in terms of office. We'll just have to track that quite closely.
All right. Well, it's going to be quite an interesting sector to keep a close eye on as, of course, we go through this kind of stage of monetary policy that we are in. Thank you so much for your time and for your insights there, John. Much appreciated. That was John Jack, CEO at Galetti Corporate Real Estate.